Hey everyone, thanks for joining us. I'm going to spend some time talking about global grain markets. I'm probably the last thing between you and happy hour, so I want to keep this pretty short and sweet. But there's a lot of, I think, pretty good things to talk about in global grain markets, and there's some complicated things like what our last speakers just talked about, which is the constraints in the input supply sector and those kind of constraints that I think we're still challenged with. But overall, I think it's a really good time to be a farmer, and I'm going to share with you some data and analytics from our team that shows why the world needs global grains and oilseeds more now than they have in many, many decades, and kind of some of the broader context of why that's the case. So it's been a few years since we've been at Farmer to Farmer. It's so good to see a lot of you. We've been doing a lot of interactions, even though COVID has kept us out of Farmer to Farmer. Always good to kind of connect with you in person. So what I want to spend some time on today is kind of hitting on some of these key drivers: global production shortfalls, inflation, renewable energy, and then some of the inconvenient macro forces we have in front of us today. I wish some of the bad items on this list I could say we're going to go away, are going to ease for us, but I don't think that's the case. I think they're going to be persistent and continue to be forces that we face certainly into 23's growing season and maybe beyond that as we move forward. If you don't listen to anything else I say, I want you to pay attention to this next small data point that I think is very, very important as to why we're in the situation we're in. And it starts with, many of you have been in agriculture as long as I have. We've usually been in situations where if we have a drought in the US or we have a drought in some other country, we will see supply eventually catch up and outpace demand and eventually draw prices down. That's what we in this sector have seen for a long time, really going back to the 50s and 60s when the U.S. Government really invested a lot in what was called the Green Revolution of the time. And so supply historically has kind of outpaced demand. And that's what these charts from a 10-year period show, especially for coarse grains like corn and barley and oats and wheat on the right. So the green bar is trend level supply growth or annual growth in global grain supplies, and again, coarse grains on the left, wheat is on the right, and then soy is in the middle. So green is the supply growth annualized over a 10-year period, going back to the early 2002 period to 2011. So taking a kind of 10-year average of growth of supply versus demand. And you'll see coarse grain supply outpaced demand, wheat supply outpaced demand, and only kind of soy was kind of in the other situation where demand was sort of outpacing supply, but by a modest margin. Now, if we look at the most recent 10-year period, okay, so that was 2002 to 2011. We're going to skip the 2012 drought in the US because that might be influencing some of this, so I just wanted to take that out. In most recent 10-year period, you can see how those trends reversed for wheat and coarse grains. You can see now the red bars, those use or demand numbers, are outpacing supply growth, okay? And in my mind, that is probably not the only reason we have prices where we're at today, because this is a long-term trend. This just didn't happen overnight. It's happened over a decade or more. But it is certainly what I think is the catalyst for going forward, which is the world needs more coarse grains, soy, and wheat as we head into the next decade ahead of us. And it's going to be challenging to kind of meet that growing demand. I'll talk about some of the reasons for these various factors as I go through the talk, but that I think is probably the most important rallying cry, if you will, for why I think farming and agriculture is going to be so important in the years to come. Now, what we know is we've seen prices over the last really 2 years plus some, going back to August of 2020, really kind of rally. And most of you are probably market watchers. You're watching the ups and downs in the market. And we haven't done much of late. We've seen, certainly corn and soy and even wheat really kind of pull back from the highs we saw a while ago. But my general belief, from a lot of the data and analytics we look at, is that we won't see prices collapse. We're not in a situation where we're going to see prices collapse, because we have quite a big imbalance in some of the greater commodities, especially wheat and corn that I'll talk about here in a minute. So that's kind of where we're at today. We expect prices to continue to stay around these levels, not to say they won't gyrate up and down a little bit, and certainly the last few weeks we've seen a little more down than up, but overall they should maintain these levels into the 23 growing season. Now, as we look at kind of why we've had production shortfalls in the last decade, it really has been kind of 3 consecutive years going back to 2020 of major losses from major suppliers in the world. Okay, we go back to 2020's growing season, which seems like a long time ago, but that was kind of the derecho wind event in August of 2020 that took out a large chunk of Iowa's crop, and we had problems in Minnesota in that season. South America had problems, Ukraine had problems, European wheat had problems. The most recent last year growing season of 2021, we saw losses again in South America induced by La Nina. We saw a lot of problems in Canada as a result of this massive drought in Canada, and Russian wheat also had struggles last year in 21. This most recent growing season that the Northern Hemisphere is now wrapping up, mostly Ukraine has been the challenged area because of what they're dealing with war, but even European wheat was off a lot. And so we still don't know what's going to happen in the Southern Hemisphere. They're still in the midst of their growing season. And all eyes are obviously turning to South America. And what we do know is that we're in for a nearly 3rd year in a row of La Nina as a result of the weather patterns around the equator. And what's unprecedented about this, or unusual, I shouldn't say it's unprecedented, it does happen that we have a La Nina this long, but it doesn't usually persist this long. And you have to go all the way back to 1999 when we've seen a La Nina persist this long. But this is now going to be the 3rd growing season in a row that South America will have to deal with a La Nina during the heart of their growing season. Now, what we know about that from data and analytics is that Argentina is probably the most impacted when we have a La Nina at this time of the season. So when we see La Nina weather, the weather pattern along the equator being in the La Nina state, we see a fairly significant relationship where Argentinians' corn yields are down about 7% to 8% on average, and their soy yields are down about 5% on average. So it's not a guarantee it will be down, but certainly the odds favor that they will see crop losses, and especially probably more pronounced in corn than in beans. And true to form, they're struggling. Their precipitation has been half of what it normally has been for this time of the year. Their temperatures have been nearly 4 degrees warmer than normal for this time of the year. And again, that's really tied to the La Nina, which is likely to persist into February and March, which means the balance of their growing season will be in this situation of a La Nina. Now, that doesn't mean that's a big bullish catalyst for prices to move higher. We don't see significant impacts in Brazil, not to say we don't have impacts at certain times from Brazil's, especially in the southern part of Brazil, but really what we see today is kind of a split situation where we have some good news around corn, I think, that I can share with you, but I think what concerns me most about the situation in South America is the big ramp up in soybeans. And for those of you that were in our NASA Climate and Ag Summit yesterday across the hall, one of the researchers talked about, their look at satellite imagery data and how Brazil continues to expand soy area year after year. It's pretty much every year they're adding more and more soy area, which in some cases means more corn production because they're double cropping with safrinha corn. So I do think that, the soy number being up cumulative across the two countries, up 18%, is a negative factor in the soy complex. But I think the one that I'm most optimistic about is corn, even though that looks on the surface concerning that they're going to increase corn production by 10%. A few things kind of stand out to me. One is that, again, if I go back to what I shared with you earlier, which is Argentina really is more sensitive to La Nina and corn yields. So that's kind of negative effect number one. And the other thing is Brazil, and it may be a little hard to see, but Brazil is betting more heavily this season on second season corn. So if we look at their by season corn acres, their first season corn is down 3% on area, but their second season corn is up 5% on area. So they're shifting more into that second season corn crop. The problem with that is that's the risky crop. That's the crop that really runs the risk of running into the dry season or getting early frost that can cut into yield. So I do think those two things, more acreage going into second season corn and the fact that Argentina will likely see some impacts as a result of La Nina, I think leads me to believe that that 10% increase on corn that USDA and CONAB have baked in is not going to persist as we move forward. Now, let me pivot slightly and talk about wheat. And in wheat, what I find interesting about wheat is that even though we have really strong output, mostly as a result of Russia, Russia's had a massive record large crop, we actually see, basically stocks in the world are at the lowest point in 15 years. Okay, some of that's expanded feed use, but the other thing that's been going on in the last 5 or so more years is we've seen a pullback in global wheat acres. Okay, so if we go back to 2015, in the globe, we had around 492 million hectares of, 492 million acres in the globe, and today that number is somewhere around 483. So global suppliers of wheat, the US, other countries I'll talk about here in a minute, have cut back on wheat acres, and feed use has increased as well. So even though Russia had a really, really large crop this year, it has still caused us to have very, very tight supplies of wheat. Where did those 8.5 million acres go? Well, the biggest cutter or dropper of wheat acres was our farmers in the US. Over the last 7 years, we've cut back on wheat acres by 10 million acres. You can see the EU has been down about 7 million acres. So as we begin to think about, do wheat acres come up enough to really kind of start to build back supplies? These are the countries that need to kind of see the increases happen. The biggest increases, we've actually had countries that have been increasing all the while global wheat acres have been going down. Russia up 6.8 million, Argentina up 5.7, Australia up 4. So I really believe that, for us to see global wheat stocks really start to build, it's going to require one of these top two countries, the US or the EU, in the coming year to increase acres. I don't think it's going to be the EU. We already have some early indications from fall plantings that they likely are not going to increase acres. So the question I'll come back to later is, can the US increase acres enough to really kind of derail the wheat market? So on the supply side, we've had a lot of hiccups, a lot of challenges. And I don't see anything, especially with corn and wheat, that's going to derail the tight supply situation. What about on demand? Here we see what I think are challenges, but I don't see threats that will derail the market as well as we move forward. So let's talk about what some of these challenges are. And I think the biggest challenge that the market is really struggling with, which is why we kind of, in corn in particular, struggle with getting above $7. We just haven't really gotten above $7 in quite some time. And the real reason, I think, is because we just have not had an export program. our export program year to date for 22 crop has just been abysmal. We have, this is a little old data because we had to get this ready for the program, but we had 626 million bushels of corn committed as of November 17th. That compares to this time last year when we had twice as much, or 1,298 million bushels. So that's the real black eye that the market keeps focusing on, which is our corn export program is really, really off. Sorghum, many of you guys in Kansas and maybe even western Nebraska, this is one that I'd be concerned about if I'm a sorghum producer, especially thinking about next year. Is China going to step in and buy sorghum like they have in recent years? It's at this point not showing up in the data. Soy and wheat are doing okay, but nothing to kind of like knock the ball out of the park, so to speak. So let's dig into the corn situation. Why are corn exports so bad? Why are we struggling so much? And to kind of illustrate that point, I want to look at two major buyers of corn in the world market. One we know really well, which is Japan. Japan's always been, for a long time, a major buyer of corn. The other one is a fairly new entrant into that space. Colombia has become a country that we've seen much more interest in corn buying and international commodity buying in general. So I wanted to look at how those countries have purchased corn from the three major competitors, the US in green, Brazil in red, and Argentina in orange. Now, the bars you have in front of you are for last year. It's a 3-month period, July to September, and it's kind of the breakout by country to, by exporter to importer during that 21 3-month period. And you can see where we kind of were this time last year. And when we look at this year's situation, you see a much dramatically different picture. The first thing that kind of stands out is you can see the red bars go up a lot. That's Brazil. Brazil basically expands their corn exports into each of those countries by a big, big margin, nearly doubling their corn exports to those countries, while the US loses some ground and Argentina loses some ground. Now, that's all really bad news for us, and that's kind of a issue I'll circle back to. But I think the good news in this picture is that even though prices for corn are high in the world market, these countries that are major buyers are still buying large volumes of corn. It's not like they stopped buying. It's not like suddenly $6 corn or whatever it is to them at their local market is causing them to throttle back corn demand. They're still buying. In fact, they're even buying more this year than they did last year. They're just choosing to buy it from a different source. And the reason they're buying it from a different source is because of price. Our price in the US has gotten very uncompetitive in the world market. And that's the reason our corn exports are struggling so much. And we're losing that competition right now to Brazil, as these charts illustrate. Now, to kind of frame it in perspective, these are international prices or export prices of US and Brazil corn, what's called a FOB price, and I'm expressing them as a spread where the US minus Brazil's corn price. So if you look at those charts, if the green line is going up, that means our price is getting much more expensive relative to Brazil. If it's going down, that means our price is getting cheaper. So anytime it's going up, we're losing business because we're suddenly getting more expensive. Now, you have an overlay here of two different time periods, 2021, which was last year from August to December, and 2022, which is the right-hand chart. And clearly you can see the huge problem we had in 2022 and still have, which is our international price of corn was $1.50 a bushel more than what it was in Brazil. And that's why we're not selling any corn in the export market. So it's trying to normalize, but it's not quite there yet. And so that's going to be a headwind for the near term as we go forward. Now, why have we had this price so high and inflated? Well, it's kind of two things. One is the Mississippi River. Okay, we've seen a lot of the headlines, we've seen the results of that, but really the Mississippi River drought that shut down exports to the Gulf caused the Gulf price to rise sharply. And that rising Gulf price is much of that catalyst for the increase in 22 U.S. values relative to Brazil. The other thing, which is a second order effect, it's maybe not as important in this chart, but it's still important, is the strength in the U.S. dollar. The U.S. dollar has gained ground in the last year because of our rising interest rates, and that's put us at a disadvantage as well. So I think these things will get better as we move forward. I don't think this is a permanent or significant disruptor over the longer term, but I think in the next month or so it will continue to kind of weigh on the market. The other thing that's been problematic for our corn export program is the lack of China in a meaningful way. And again, I'll go back to 2020. If we go back to August 2020, U.S. corn prices were $3, and we had the derecho, which kind of got the market going higher. But China, for the first time in history, stepped in that fall time period of 2020 and bought the largest amount of corn exports or corn volume from the U.S. than they had bought in the entire decade before that. So in a 2-month period, they bought more corn from the U.S. in 2 months than they had in the entire decade. It was a massive surprise to the market, which got us from, $4 corn to $5 corn really quickly as a result. What we saw in that time period, sorry, I seem to have lost some of my slides here. In November of 2020, we had about 450, 460 million bushels of U.S. corn that were committed to China. At that time, Chinese prices were well above U.S. prices, making it affordable and viable to move corn from the U.S. into China. The red box down below, which may be a little hard to read, shows where we're at today, which is instead of having 400 million bushels on the books to China, we have only 138 million bushels. And that's really because Chinese internal prices are pretty much on par, just a slight above U.S. values versus what they are in China, which makes it unfeasible for them to buy corn from the U.S. Now, I think the good news is, as we look forward, we will see hog margins kind of be a catalyst for returning Chinese corn purchases. So this chart is basically showing internal margins for hog growing, hog finishing. You go back to 2018, that was kind of the big outbreak of African swine fever. They had recent problems in 21 and 22, but now hog margins are starting to improve. So I don't think it's a quick turnaround that necessarily leads us to see Chinese buying improve, but I think this is certainly a promising sign that Chinese corn buying could improve as we move forward. Okay, let me pivot now and go from the export market and talk a little more local and domestic demand. And that really starts with kind of the biofuel space. And we all know the story about ethanol, where ethanol has been with us for really 17 years or so. I go back to 2005, 2006 was kind of the launching point for ethanol. And now we have this new biofuel, which is renewable diesel. So I'll touch on both of these. But one of the things that is concerning for those in ethanol and those of us in agriculture is like, will electric powered vehicles start to displace gasoline? That's a huge existential threat to the survival of ethanol. If suddenly every consumer races out and gets a Tesla, or whatever their best model is for electric vehicles, and suddenly ethanol has very little opportunity for markets going forward. This data is basically looking at car registration, small light-duty vehicles, which is basically, I think of as consumer vehicles. And it shows a breakdown in 2018 and 2021 for gas, E85, hybrid electric vehicles, and EVs or plug-in hybrids. And then you can see like the change in them. Now, this may be a little hard to digest, but here's the key takeaway. The key takeaway is that in this 3-year period, we've seen the electric vehicle share go from 0.4% to 0.8%. All right, it has not moved the needle that much. And even in flat numbers, you see the combination of HEV or hybrids and plug-in hybrids increase total by 2 million cars. So in that 3-year period, we increased 2 million cars that are in some ways more efficient and using less gasoline. So we increased cars by 2 million. But look at the top line number. Top line gasoline number, we actually increased gas-powered cars by 10 million cars. So we've actually not done much in terms of displacing the amount of gas vehicles on the road. Now, what is concerning is we do see a drop in E85. But again, I don't think that's as big an impact as the fact that we still see gas-powered vehicles really being a significant portion of the driving miles situation. In terms of U.S. finished gas, this is another metric we can sort of watch to see, is gas usage in the U.S. starting to fall significantly, which could be alarming for ethanol. We do see the COVID effect in 2020, 2021, the big drop down, but, literally we kind of returned to a new, somewhat lower steady state, if you will, but it's not up much from last year. So, not a huge off-the-cliff drop in gasoline usage, but also not moving up substantially as well. When we look granularly or locally at the actual ethanol capacity or ethanol production numbers, it's not doing a great situation now. We are a little bit behind pace for the USDA's estimate. Margins have been mostly good. They were certainly really good last year, and they're not quite as strong this year. But I think, overall we can expect probably ethanol numbers to get better. I think this morning's EIA ethanol number was better than expected at just over 1 billion barrels a day. So, or I'm sorry, 1 million barrels a day. So I do think this is something that, is worth watching. We do have some catch up to do, but I don't think it's something that derails our corn demand as we move forward. And then finally, does ethanol have a market in the export or international market? Not especially. There's not a big catalyst here. We did see, this last year that just wrapped up of 2021, wrapping up in August of 21, we did see an improvement over the COVID impact year. We do see exports improving versus last year, but again, there's no solid upward trend in U.S. ethanol exports. And that's a sharp departure from what the industry probably thought, say, in 2017, 2018, when China was really trumpeting their renewable fuels policy, and they were going to be, buying a lot of ethanol. And they did buy some ethanol in 2020, but it has not materialized to any sort of significant trend. So as I think about ethanol, my takeaway is I don't think it's a growth sector, but I don't think it's a fall off the cliff sector. I think it continues to maintain kind of that baseline of stability as we move forward. Where we do see growth and opportunity is in the renewable diesel space. Here we do see what is a fairly sizable push in terms of interest from not only big ag, but also big oil. I find this very interesting that both big ag and big oil are pairing together into joint ventures to build out new refining capacity or crushing capacity. And that's something we did not see in the early days of ethanol. Big energy, big ag, or big oil did not really want ethanol as part of their fuel supply. They fought it tooth and nail, if you will, but now we see a much more alignment in that space. And so we do see, kind of interest in renewable diesel, and I think that's going to be very positive. There was some concerning news late last week when the EPA announced the RFS standards. That gave the bean oil market a little bit of a shock because they saw the mention of electric vehicles as counting towards renewable credits or RINs. My takeaway is that the strength in renewable diesel has very little to do with the RFS, and it has much more to do with the low carbon fuel standard in California. So while that was kind of a shock to the market, and markets don't like shock, especially when they're very premium and bean oil prices have gotten elevated, I don't think it's any way a derailer of the synergy that is being built in renewable diesel, because that is tied to things other than RFS that are very tangible. The bottom chart's a little hard to read, but we are expecting to see 500 million bushels of new soy capacity in the next 3 years. That's huge. It's a big, big push of new soy crushing capacity coming on. The states below list the breakdown. Put that in perspective, that's roughly 10 million acres more of soybeans in the US that need to be grown to keep kind of the supply-demand balance sheet about the same. So that's a big, big number to satisfy and that farmers will need to satisfy as we move forward. All right, let's talk about the negative side of the farm balance sheet, and that's the inflation things that are going on. Okay, there's a lot of things that are really going up in cost. Your checkbooks are having to write fatter checks. Is it persistent or is it transitory? I think for the time being, it's probably pretty persistent through 23 and maybe even beyond. So let's go through some of these hits of what's going up and not helping our checkbook look better. Oil prices, energy prices in general have been up over the last 2 years. Some of that's tied to what's going on in Europe, or in Eastern Europe with Ukraine and Russia. But really, it started well before then. It started as a result of really just kind of a pullback in oil supplies that has never kind of come back online, even as prices have gone higher. I think what's important for us is probably the natural gas situation, because that's so heavily tied to prices of nitrogen fertilizer. And those of you may have been aware, we did our Epion fertilizer poll in the fall, or fertilizer survey in the fall, and we showed, really, really different prices being paid around the country. And nitrogen fertilizer is so volatile right now, and really kind of tied to what the price of natural gas is. This chart's a little hard to read, but it's showing anhydrous, urea, and UAN for different times of the growing season. You've got fall prices in orange. Green is spring prices, so depending on when you're applying it. The takeaway is that anhydrous prices, for example, did back down this fall versus where they were in the spring, but they're still substantially higher than they were a year ago in the last fall. And I don't expect prices to come down as we head into spring. So I think there's going to continue to be high nitrogen value prices as we go into spring. So I would, think strategically about what that means for your operation. Does it mean you need to change up your crop rotation at current values, or maybe it just means you need to just, lock in prices and potentially, change your application rates. One of the things that I think will be a ripple effect throughout the globe is the fact that Europe, which is the third largest producer of nitrogen-based fertilizer, is very constrained because of the lack of natural gas. So we know kind of the consequences of the Russians cutting off natural gas through the pipeline into Europe. We hear a lot about that, but keep in mind that that natural gas feeding into Europe is the lifeblood of their ammonia plants and nitrogen production, and they're really, really handicapped as a result of that. So I expect this to persist firmly into our growing season of 2023. The other market that has been on an upward trajectory, which may be good or may be bad for you, depending on which side of the fence you're on, is farmland values continue to rise. We've seen in the last 2 years, U.S. average farmland values are up 20%. The biggest gains have really been in the Western Corn Belt, so where we're at today in Nebraska, Kansas, Iowa, South Dakota, Minnesota. We've seen nearly 30 to 35, 40% gains in those states in the last 2 years. Mississippi Delta, much smaller, but still positive increases. A lot of the questions I get asked are, will farmland values start to really turn lower as a result of higher interest rates? And my belief is no, they will not. If you go back to the 80s, when we did see farmland prices turn lower, my belief and our analytical work on this suggests that the way you get farmland values to go down is kind of two things need to happen. One is you need crop profitability to really take a nosedive, and we're not seeing that today, and nor do I expect it in the next year or so. But you also need interest rates not only to be high, but they need to rise well above inflation rates. Our inflation rates today, latest read from the Bureau of Labor and Statistics, around 7 to 8%, and our interest rates are nowhere near that in terms of the numbers we're looking at. So we need interest rates to be well above that to kind of start to throttle back farmland values. So I don't think farmland values start to pull lower. They may stabilize or not grow as much in the year ahead or a couple of years ahead, but there's nothing that I see that suggests farmland values are going to repeat what they did in the 80s. For those of you that may have seen this or haven't seen this, we did do a really detailed dive on Illinois, and we'll continue to release these localized state-level farmland reports that give you really kind of local perspectives in your area that basically show how farmland values have changed around your state. So this particular Illinois project, I think it had 9 regions of the state, and we showed farmland values. The key takeaway I wanted to share with you about this research and what we found is that the leader in farmland values to the upside is always the high quality ground. Okay, lower quality ground follows and lags high quality ground. So when we see markets moving up in terms of farmland value prices, we see the high quality ground being bid up the most in percentage terms. Now, that works the opposite extreme when we see markets come down. We see farmland value that is high quality go down quickest and fastest. So that's something to keep in mind as you're thinking about farmland purchases. Now, another negative factor that's a headwind for us in farming is there is no cheap money anymore. Interest rates have gotten high. If we go back to this time last year, you know, the 30-year rate on the government debt was just a hair below 2%. Today, it's well over 4%. It has backed down in the last month because of positive or improved inflation readings, but I don't expect this to be the start of a downward trend. If anything, I think interest rates will need to go up probably another 0.5% in the next Fed move, and they will likely persist higher until the Fed starts to see big changes in inflation. We've seen a modest improvement in inflation, but we have not seen significant downturns in inflation. And until we start to see all of those things happen, I don't think the Fed eases on interest rates. The other negative implication of this has been the strength in the US dollar. Over the last year, our US dollar to the Japanese yen has strengthened 30%. Okay, so go back to what I showed you earlier, which is why isn't Japan buying more US corn? Well, even if we had kept our US corn price the same, the price to Japanese consumers, Japanese buyers, has gone up 30% just because of the change in the currency. So that's a stiff headwind. Again, it has backed down a little bit in the last month, and we need that to keep moving in that direction. Finally, I do want to talk a little bit about basis, and here we see so much division around the country. Super strong basis in parts of the country, super weak or abnormally weak basis in parts of the country, and it really has everything to do with this persistent drought that has kind of blanketed much of the western part of the U.S. for the last couple of years. This map, which may look familiar to some of you, is the Drought Monitor map, or it's actually the Drought Monitor data from University of Nebraska, and it's basically, I'm starting this map in December of 2021, so this time last year. I happen to be from Montana, so I can tell you that red area was really painful. We had a horrible crop that year, one of the worst droughts since 1988. I'm going to animate this forward and show you how it's changed over the last 12-month period. But what you can see is that there's very few areas that have improved. Everyone is sort of either at a low level of drought or starting to see drought intensify. So those of us in Montana got a little bit of a break, even though we continue to be in drought-prone areas. But you can see the drought has literally just spread everywhere, which is largely why the Mississippi River has struggled the way it has, because it gets a lot of, about 2/3 of the water from the left-hand side of the country and about 1/3 from the right-hand side of the country. And now the drought has kind of blanketed all across the country. What has that done to basis and cash prices in your area? Well, it's created this huge division. So what I'm showing here is corn basis, and I'm going to do a similar animation here on the basis, but the basis on the left, the map on the left is showing basis versus normal, and the normal being a 5-year history, and then the charts on the right are the state average basis, where black lines are normal basis for this time of year. Now, I'm starting this animation right around the middle of September, which is roughly, a few weeks before harvest for the majority of the Corn Belt. But you can see, going into harvest, corn basis was super strong in that drought-prone area of the southwestern plains into Kansas, western Nebraska, a little bit weaker in the east. And let's just kind of walk through it week by week as we go forward. So we're now into mid-October. As we get into mid-October, you can see a lot of red showing up. This is the intensity of the Mississippi River drought impact. The Mississippi River really started to shut down about September 17th. So this is about a month into that, and we can see just really dramatic effects on basis in that Mississippi Delta and Ohio River Valley. As we move forward, now we're into early November. It's starting to improve along the river, but still seeing effects in the eastern Corn Belt. So, this is important, I think, as you're managing your marketing around these decisions, because even though I'm bullish on corn, I'm not necessarily bullish on basis when it's $1 above normal, and especially when you have interest rates that are twice as much as they were last year. So, I want you to think about that if you're sitting in Nebraska or Kansas and you're sitting on a pretty large stockpile of corn. That's costing you money because interest rates are now higher by a wide margin, and you have really, really high basis. It's not to say basis can't get higher, but you really have to fight pretty aggressively. You have to see basis really, really start to gain before you cover some of your interest costs on that. So I would think about maybe moving cash grain and using some marketing strategies to set yourself up. Soybeans, very similar story. I'm going to walk through this a little more quickly, but basically it's a similar story. We see very strong basis before harvest. We see a lot of green, which means really, really strong basis ahead of harvest. And as harvest progresses and the Mississippi River dries up, we see this massive impact along the rivers, and we're starting to normalize. But again, where we are today in Nebraska is well above normal for this time of year. So again, think about what it means to have beans in the bin and storing those with interest rates where there are. Finally, I want to talk a little bit about 2023, give you some thoughts on what we're seeing for 2023 acreage. Just a reminder, we do our acreage survey starting in March, and my colleague Regina will be doing her winter wheat acreage here shortly, so please watch for those. Remember that those data are completely confidential. They're only for your benefit. We use your data to compile with all the other farmers that participate to give you our best acreage forecasts ahead of key USDA reports. How well have we done? Pretty darn good. We have been in this business of predicting acreage in the March report and the June report for the last 2 years, so that's 4 reports in total. We have used your data, farmer data, to make predictions with. We are the best forecaster, the lowest error forecaster on corn and beans compared to 23 other analysts that have been doing this for decades. And it's not because we're smart, it's because you're sharing your data with us. And we're giving it back to you to help you make those decisions. So we give that data, that report back to you with our best estimates a week ahead of time so you can make those marketing decisions. So again, please participate. We'll be down at the crop marketing booth later. I'd love to chat with you more if you have questions about that, as would our team in crop marketing as well. Now, we don't have that data yet, but what I can share with you is from our fall fertilizer survey that we did in September, where we asked farmers, where are you leaning, in terms of increasing, decreasing, or maintaining your acres for corn, soy, wheat, sorghum, cotton, et cetera. The green bars are kind of the percentage of farmers that said they were going to increase acres. Red bars are percentage of farmers saying they're going to decrease acres. The thing that stands out to me is wheat wants to gain some acres. A lot of farmers say they want to increase wheat acres this year. A lot of farmers say they want to increase sorghum acres too. On the corn and bean numbers, it's a little more even-keeled. I don't have the state-by-state breakdowns in this presentation, but I can tell you when we look at the corn numbers, most of that corn increase comes from Minnesota, North Dakota, South Dakota, where they struggled last season with a wet spring. So they weren't able to get the corn crop in the ground. They want to come back in 23 with bigger corn acres, but otherwise, most states are just kind of even. They're not really necessarily signaling or showing that they want to increase acres sharply one way or the other. So I do think wheat acres increase in 23. Corn acres probably increase by a modest amount, mostly because of what's going on in the upper Midwest and Northern Plains. And bean acres we'll have to see. I do think there's some double crop potential from the south with wheat that could increase acres. So just to kind of recap, corn, I maintain that we will have a struggle for the next month or so with uncompetitive exports. I do think it'll improve, but it may take some time. We do think there's risk for South America's corn crop for the reasons I outlined earlier, which is Argentina, very susceptible to La Nina, which is firmly showing its effects already in the growing season. Brazil, putting so much weight into their second season safrinha corn crop, which is so vulnerable to yield risk. And I do think as we get into 23, we're going to see what the world is able to do in terms of growing more corn, because nitrogen in the world has gotten so much more expensive. Again, I know we in the US don't like the prices we're paying for nitrogen and the struggles we have with availability, but if we think we're struggling, it's not anything close to what the rest of the globe is facing in terms of high nitrogen prices and availability. Probably the one crop I do have more concern about, especially in the next 6 months, is soybeans, where South America could and probably will see a big crop. We don't see as much impact from La Nina there. We know that Brazil is up sharply on their acreage. Chances are they will get close to what is pegged in the USDA numbers already. The good news for soybeans long term is we have this huge soy crushing capacity that is going to be built out over the next couple of years and going to need to be fed with 10 million more acres of soybeans in the US. So I think that's a supportive element as we go in forward. But in the short term, I do think it may have the potential to lag feed grains. Finally, wheat, tight supplies. Can US farmers, I think US farmers are really about the only major country that can increase wheat acres in the next 23 growing season. Can we get an extra 6 million acres out of US farmers? I don't think it will be that big. I think that will be up, but I don't think it'll be anything like the 6 million acre number we would need to start to see global stocks build. And then of course with wheat, we have the ongoing struggles with Ukraine and Russia that continue to hamper global wheat supplies as well. So that really kind of wraps up everything. I so appreciate your time. I think the takeaway I have really, again, where markets are high today, for better or worse, they will continue to be high for 2023. So I hope you can make plans accordingly. I do think that input costs will continue to stay inflated, especially on the fertilizer side of the business. So with that, happy to take any questions you might have. One down here. Beyond 23, my crystal ball gets a little more murky beyond 23, but I think it sort of continues. I mean, I think where I'm going to stand on my statement is on that displacement of supply versus demand. Where are we going to start to see global supply start to outstrip demand? The only place we're seeing expanded acres is Brazil right now. okay? And that's on the bean side mostly. They're expanding they're expanding their second season corn, but it's such an inferior corn crop that they can't really keep up with the U.S. So, I mean, it would really take Brazil to ramp up even more to start to change some of these paradigms. And I don't think that happens. So really, we're talking about yield needing to take more growth into the future. And we always expect trendline yields to increase. We haven't had a big bump up in trendline yields in a long time because we've had such bad weather. Now, if the La Nina starts to pivot away and we get into, say, neutral or El Nino, that may help some of that, but I think the longer term trend is that yields are not necessarily keeping up. And when we were in our NASA summit, one of the scientists talks about how a warmer planet, even if you believe the kind of lower thresholds of warmer temperatures that are projected, that will keep yields from keeping up with global food population demand. So, I'm not saying we won't go lower, but I don't think we're going to go anytime soon back to $4 corn and certainly $3 corn.
Hi, Kevin. Aaron from Nebraska. Noticed about 2.3 seconds talking about Ukraine. Is that because of CNN's making a mountain out of a molehill, or are there just too much uncertainties to be able to say one way or the other?
Yeah, I mean, great. I mean, yeah, we can spend a lot of time talking about Ukraine and Russia and things like that. My take on it is that, you know, even if the guns stop firing, that country is pretty decimated. I was in Kansas City a couple weeks ago at the Farm Broadcasters Convention. They had a Ukrainian farmer there, and he talked about how, you know, 22, which they just wrapped up, they kind of got by fortuitously because they had bought a lot of their inputs, planted their fall crops before the invasion in 22. But now they're well beyond that. 23 is fully in front of them. They have no inputs. They don't even have power. You know, they don't have a lot of the things that you know, a farmer would need to even think about 23's production. So I guess my takeaway is we can conjecture and speculate all we want about what's going to happen over there, but until something really changes, it's a mess and it's disrupting trade as we move forward. And I think that's going to continue into 23 as well.
Kevin, Mike Powers, Ames, Iowa. How are you, sir?
Good, how are you, Mike?
This renewable diesel demand you said is going to ramp up pretty significantly over the next 3 years. Will that help soybean price? How fast is that going to ramp up to improve demand in the U.S. to offset what South America's, Brazil in particular, looks like they're going to produce this year?
Right, that's a great question, Mike, and you know, I know there's ADM people all over Farmer to Farmer, so you should bend their ear because they're going to have a better perspective. I know they're building a plant in North Dakota with Marathon. I mean, my take on it is, you know, we don't know exactly, you know, but it is probably going to continue to be more soy crushing in the years ahead, in the next 2 to 3 years. I think where I see the world kind of playing out is Brazil becomes the exporter to the world for soybeans, and we become the processor of soybeans, especially for bean oil for renewable diesel. It's not going to be definitively we're going to fall into those two buckets, but there's going to be this kind of perpetual shift as we move forward because, you know, we're building all this capacity for a reason, and so that's naturally going to take away some of our exports of beans to the world market. But to answer your question, you know, it's not all going to come online tomorrow or in the next 6 months, but it'll gradually come up. And I would expect it to kind of just be this kind of strong demand base, if you will, that continues to grow demand and keep our markets supported.
Yeah, my name is Austin. I was just curious what your thoughts were on the winter wheat crop, since you were just showing that there's a pretty big drought all through the fall, and I've seen some pretty sketchy looking wheat fields.
Right. Yeah, great question. I mean, what we know about winter wheat and somewhere out there in the abyss is Regina, who does a great job on wheat. So I will use what she's researched quite extensively, which is that, winter wheat yields based on fall planting or fall conditions are like no relation whatsoever. You can have an abysmal crop, and it can still survive. Now, in an extreme like this, we just don't have enough data to kind of say if it's as bad as it's been this year, can it survive? We just don't have, we don't have 100 years of data to test that on because we haven't seen this kind of situation that many times. But, I don't think it's a huge catalyst for wheat because wheat conditions are so bad, but it is certainly something to watch as we go forward. And, if we don't get a really, really big jump in winter wheat acres in the January report from USDA, then I think the market will pay much more attention to the quality and crop condition scores that are coming out.
Mike from Nebraska, can you dig into what you think is going to happen with EV, electrical, and the tie impact on ethanol next 5-10 years?
Yeah. Well, if you go back to what I said earlier, I think, in the near term, even though we've heard a lot of press, we've seen a lot of stuff about electric vehicles, the numbers in terms of registered vehicles that are electric vehicles are very, very small. I mean, we've gone from the entire U.S. consumer fleet of cars going from 0.4% in 2018 to 0.8% according to the last data in 2021. So negligible increase. Is it increasing? Yes. Is it percentage-wise of the entire electric vehicle fleet? Yes. We doubled electric vehicles from 1 million to 2 million in that 3-year period. But it's not displacing a lot of gas-powered vehicles at this point. It may reach that, start to get some legs and start to get some growth. But my takeaway is I don't see it in the next 3 years, even 5 years, having a major displacement of the ethanol market. Won't be a growth area for us, I don't think, but I don't think it displaces ethanol. Other questions? Very good. So happy hour is coming up. Oh, we got one more question. Just a reminder before we get to this, happy hour is coming up. I'll be at the crop marketing booth, as will many of our market advisors, chat markets with you. So come join us for happy hour. Yeah, one last question.
Thank you, Kevin, for the talk. One thing I was confused about is we were talking about how the export market for corn is weak, right? So I would expect that with that lesser foreign demand for U.S. corn, that would weaken the price. But so it seems like some of these other factors more than offset that. And so I'm curious how that happened. And then also if the export market was better, what that might do to the price of corn.
Yeah, I mean, it's very much a give and take. So our export sales have been bad because our prices got so uncompetitive. So it's like prices got really high, and I attribute most of that priciness to the Mississippi River. That was kind of the first order effect, and then the second order effect was kind of the U.S. dollar. So that led to uncompetitiveness, which led to our export sales to be really slow and sluggish. Now, those things can start to shift. I think as Brazil starts to lose, they start to finish off their export season, if things can start to normalize around the Mississippi River, then we can start to see us have another window of opportunity to sell some corn into the world market. So it's kind of like, which came first, and I think in this case what came first was mostly kind of price and competitiveness that has challenged us. All right, thank you so much. Appreciate the time. See you down at the crop marketing booth.